Well, hello and welcome to the DSM Forward Ask the Expert series. The series is presented by the Greater Des Moines Partnership and is part of our DSM Forward initiative. Our goal is to help business leaders connect, share, and exchange information and resources related to moving forward into this next stage of reopening. The partnership has published industry playbooks, business playbooks, FAQs, and other resources available to you on dsmpartnership.com/dsmforward. We hope these resources, in addition to this Ask the Expert series, is helpful to you. And you can take a look at this everything at dsmpartnership.com/dsmforward. I want to say a thank you to LWBJ for providing two of their really outstanding people to act as our experts today. Dave Hove, Senior Tax Partner, and Michael Trenton, I just pronounced your names wrong, Michael, sorry about that, Director of Audit Services. Their contact information is here up on the slide. And I want to let you know that we'll be sending out some information after the fact that will also include their contact information should you wish to get a hold of them. So again, thank you for joining us. Logistics-wise, if you can mute your microphones, turn off your video just to save bandwidth, and open up the chat window. We're going to be using the chat window today for the Q&A sessions. So feel free at any time to start typing in questions as we go forward. Our speakers will be providing some opening remarks, and then we will open up for your question. And remember that today's session is primarily for you to ask questions. So be thinking of what you'd like to ask as you listen. So with that, Dave and Michael, we'll let you guys take it from there.
Sure. Thanks, Mike. Thank you, Mike and Meg, and thank you, all of you that are listening to us. My name is Dave Hove. I'm a Senior Tax Partner with LWBJ. And Michael and I have graciously agreed to lead the LWBJ task force through these trying times, with the PPP loan primarily, with the payroll tax credits and options that the CARES Act provided, and the SBA emergency disaster injury loan. Needless to say, as most of you, probably all of you that are on this webinar, you know, we've spent the last 4 or 5 weeks working primarily with the PPP loan, and unfortunately, at times it's been difficult because the SBA is slowly releasing guidance almost on a piecemeal basis. But we're going to try to do the best that we can today to answer your questions based on our understanding, our experience, and our conversations, not only with the SBA, but also with local banks. So with that, I'll turn it over to you, Michael.
Thanks, Dave. And I just wanted to start with a short disclaimer. You know, the information that Dave and I present is for general informational purposes only. Please don't rely on this as a material basis for making any business, legal, or other decisions. You know, reach out to your advisors. You know, guidance continues to come out daily. You need not look no further than the safe harbor guidance that was issued, you know, late last week, the day before kind of this required repayment period. You know, and it was several weeks after the initial application came out, and the day before, you know, companies had to make a significant decision. So we want to start with that there is more guidance forthcoming, and the SBA has said as such. But I think what I wanted to do, just to start with briefly, is highlight or talk about the forgiveness application. Hopefully most, and I believe most of the companies that we're working with have filed for their PPP loans. And most people that are planning to file, I think, have done that. And so, you know, fortunately, the SBA issued the forgiveness application on Friday of last week. And that's provided us kind of another glimpse at how we think the loan forgiveness is going to work. They did note that more guidance will be forthcoming. So this is, you know, based on what we know today, but is all subject to change based on information that the SBA still has forthcoming. I believe Mike sent out, or in the materials, there will be a link to the SBA application. It's actually, the mechanics of the application itself aren't very straightforward, but they do, I think, accomplish the intent of the PPP loans, which is to evaluate payroll costs and these other costs, focus primarily 75% threshold on payroll costs, but also trying to capture and adjust for any potential reductions in FTEs or salary reductions greater than 75% during the coverage period. The application itself has different components. It has the loan application. It has a worksheet, or a Schedule A, and then a worksheet supporting the Schedule A. And as I've worked through it or looked through it, it's almost best to start kind of at the back and work your way up to the top. And so I think with some of the questions that we plan to cover today, I think we'll talk about different aspects of this. So I think what we'll do is probably jump into questions. So we'll start at the top of the text chat and work our way down. So I'll start. Can W-2D owner-operators receive bonus hours to use up PPP payroll money? There's, I would say that there's a little probably disconnect on this. Dave was on a call with some SBA lenders, and they didn't really say much about bonus hours. I was on a separate call with SBA representatives that did have some concerns about bonuses or sort of quote unquote extra payments. And so I think our guidance there would really be to start with your lenders, be in a constant conversation with them about how they're going to view some of these payments, and stay tuned for additional guidance. Dave, I don't know if you have anything to add.
Yeah,
there.
I'll just add, Michael, in talking to local lenders, the consensus with them has been that if you can show that this bonus, was not unusual, that you normally paid bonuses, in the first or second quarter, based on how the company did, if that was a common practice, as long as you documented that, they were not going to have any problem with that. Like Michael says, there's even some disagreements amongst the offices of the SBA that some say that bonuses can be paid. Same with accelerating commissions. As long as those commissions have been earned and you can document that and they weren't just a prepayment of anticipated commissions. Another tip that we've been advising clients is if you have a lot of accrued payroll or accrued PTO on the books, I know some companies don't require employees to use it and carry over a maximum amount. It's unlimited, and a lot of employees view that as a retirement payout. But if you wanted to reduce that liability and prepay some of those accrued PTO or sick leave hours, that's another option too. Again, anytime you make a unscheduled payroll payment, you have to keep in mind that that additional payment does not push the annualized wages for that employee over $100,000, or part of that will not be allowed. And that's based on an annualized amount over the 8 weeks. So each person can only have compensation up to $15,385 during this 8-week period. Anything over that amount to one individual will be disallowed, since they'll be annualized over $100,000.
Okay, thanks, Dave. Next question here. If additional information is forthcoming from the SBA on applying for forgiveness, when should we complete this application? I think ultimately that decision is going to rest with the banks first. The application is required to be sent to your lender, and then they will submit it to the SBA. I think that there are, there's the potential that you could have enough information to fill that out at the end of the 8-week monitoring period, but there are also some other safe harbor opportunities available that do need information as of June 30. So, post June 30 is probably a safer time to really start thinking about being able to apply. But I would start with your lender and evaluate the information that you have available related to the application and to be able to complete that. But from at least the application that was provided, there was not a restriction on applying for it sooner than later. I would add that there is a 6-month deferral window on the accrued interest, and so there's no cash outlay required. So this may be an opportunity to wait a little bit and see what other information comes out to make that an easier process. The next question says, I can find where vehicle leases are claimable, but what about vehicle loans on vehicles you own? So I think there's probably 2 different answers to this. For a corporation, I do not believe that interest for vehicle loans would be included. For a self-employed individual, I do believe that you could deduct, as long as you deducted it on your Schedule C, that you could deduct interest for vehicle loans. Dave, I don't know if you have any other thoughts on that.
Yeah, I'll just jump in here. As Michael said, when the initial interim final rules came out prior to the opening of the application period, the definition of rent, mortgage interest, and utilities was very narrow and very vague. When the SBA issued their second set of interim rules regarding the self-employment process, they really expanded upon that. And, in my opinion, in reviewing the loan or forgiveness application, when they talk about a summary of costs eligible, it appears that they've adopted the broader definitions that were in the interim rules for self-employed people. Because it says mortgage obligations or payments of interest, not including any prepayment or payment of principal on any business mortgage obligation on real or personal property incurred before February 15, 2020. So, my interpretation of that is that, yes, interest on a car loan that was used in business, or at least the business use percentage of that interest, would be a forgivable expense. And I think that's backed up by, again, the interim rules for the self-employed individuals. Same with lease payments. If you're leasing an auto for your business, then that lease payment should be a forgivable expense, again, based on the broader definition of non-payroll costs that is part of the loan forgiveness application.
Okay. Dave, I'll let you handle this next one too. I think it sort of piggybacks off one we had earlier, but if we make our 2019 profit sharing contribution in 2020, can that amount be forgiven? If so, can the entire amount qualify for forgiveness?
I'll start by taking the easy way out, in that this is one area where I have not seen the SBA expand on how the retirement plan contribution is computed for forgiveness purposes. The opinion out there from various CPA practitioners is that the retirement plan contribution is based on the wages paid during the 8-week period after you were funded, which if you provide a match, a 401k match to your employees, that's pretty easy to compute. Whatever their wages were times the match percentage is the retirement plan contribution that you could include for forgiveness. I do not believe, and have not talked to anybody that believed the 2019 contribution, if paid during the 8-week period, would be a forgivable expense. As you recall, when you computed your loan application originally and determined how much you could borrow, that's when you should have included the 2019 retirement plan contribution in your calculations for how much you could borrow. So again, my opinion is no, it would have to be 2020 retirement plan contribution based on wages paid during the 8-week period. But there's been no official SBA guidance on that question that I've seen.
Okay, thanks, Dave. Next question, how do you return any unused portion of the loans? So, ultimately these are begin as loan agreements. And so if there's an unused portion, you want to coordinate that with your lender, but I don't believe there's prepayment penalties. And so any unused portion could be returned to the lender and settle up any accrued interest at that point. Next question is, I'm an S Corp owner. Are my health insurance premiums forgivable as payroll expense? I think the short answer is yes. Any health insurance premiums for employees should be or can be included as payroll costs, similar to including them in the original PPP loan application. Next question, are there any restrictions on issuing S Corp distributions during this 8-week period? Dave, I'm going to kick that one to you.
Well, there wouldn't be any restrictions other than the fact that you are not allowed to use PPP loan proceeds to pay distributions. Since that's not a qualified expense, not only would that distribution amount not be forgiven, but then you could also be subject to potential SBA penalties for not using the loan proceeds for their intended use.
Yeah, so I'll maybe chime in here. I think in general, our stance is that while the PPP funds do not necessarily need to be in a separate account, if your lender requested that or required that, then that's their prerogative, and you need to follow their rules. But regardless of what account the funds were deposited in, we would highly recommend a very accurate tracking of where all those costs are being spent to help just with the accounting as you go through the forgiveness process. 2 questions here coming up. Are owners on a partnership LLC able to include their salary but not distributions? Dave, do you want to take that one?
Yeah, partners in a LLC would be considered self-employed individuals because they should not be receiving a W-2 based on the Internal Revenue Code. If they are paid guaranteed payments by the partnership, which is essentially salary without it being considered payroll, then those payments would be listed as self-employed payments. And on the PPP forgiveness application, as well with the loan application, there was a line for self-employed individuals, and that's where you would include guaranteed payments to partners in an LLC or partnership.
Okay, thank you, Dave. Can you explain the alternate 8-week payroll term rules? Does the period start with the first day of the next payroll period after PPP funds are received? So yeah, to answer this, the forgiveness application did give companies 2 different options for the payroll covered period. The initial or the main covered period starts on the day that funds are distributed or funded to the company, or if the lender is holding on to the funds and doing staggered distributions, it'd be the day of the first distribution. But that's the starting point, and then you've got 8 weeks. There is an alternative payroll covered period that is allowed in the application, and yes, it does start with the day of the first payroll beginning after the funding date. And I think if you kind of work through this a little bit, what that really is meant to do is provide an administrative ease. First of all, this alternative payroll period is only eligible for companies that pay biweekly or more frequent payroll, so biweekly or weekly. And the intent, I believe, is really to ease the administrative burden of tracking payroll costs between different payroll cycles. So by starting your coverage period at the start of a payroll cycle on a biweekly or weekly, effectively your 8 weeks will be exactly 4 or 8 payroll cycles, and should make the math or the computation a little bit easier to follow. That said, if you, I believe that if you follow the normal covered period, you do have the potential for additional payroll costs based on the overlap of your payroll periods, and the ability within the application did confirm that you can, at the end of your 8 weeks, you can also take credit for payroll costs incurred but not yet paid, that are paid after the covered period. And so by using the formal covered period within the application, it probably increases the total amount of your payroll costs, but it does create a few more complications as far as the calculation. Next question. If we pay our rent semi-annually, do we have to allocate only 2 months, or can we include the semi-annual amount paid in the period? I'll start with this. I believe that if one of your payments would fall within that 8-week covered period, that you would be able to utilize that full amount plus any days incurred after that payment date. So Dave, do you have any other thoughts on that?
No, I don't. Again, I think that's another kind of question that's yet to be answered in its totality. I agree with Michael, but the SBA has not come out and expressly provided an answer that rent is only 8 weeks worth of rent if the payment during that 8-week period covers more than an 8-week period. There is a consensus that rent cannot be prepaid, but if the normal rent period for past rent fell in that 8-week period, I think, like Michael said, I think there's a legitimate reason and argument to take that, but I haven't seen anything in writing yet.
Okay. The next question here is, if our payroll is monthly and our 8-week period is May-June, can we use payroll paid on June 5th, and hours for June paid on July 5th? So, based on how it's written now, I do believe that you would not be able to use the alternative period, that you'd need to use the formal covered period. And so any payments within that covered period, plus any payroll costs incurred after the last payment in the covered period, we believe would qualify as payroll costs based on the current application guidance. Next question, was wondering if you could walk through the forgiveness calculations and how the forgivable portion is reduced if your payroll per employee is less than 75% during the 8-week period compared to January through March. Yes, so if you do have the ability early on in the application to make kind of a safe harbor conclusion that if your payroll or salary was not reduced below 75% for any employee, then you can make that assertion and stop with that calculation. If you did reduce either salary or hourly wages more than 75%, what the calculation does effectively is take the difference between the average salary or that average hourly wage from that period of January 1 through March 31, 20, compare it to the covered period, and then it does quantify in dollars. So it's as far as the salary reduction, it's a quantification in dollars, not like a ratio, but per employee you would quantify the dollars below that 75% level, and then that salary reduction would ultimately potentially reduce how much forgiveness you could receive. Next question, can we count the employer portion of taxes for a 100,000 plus employee in addition to the salary during that period, as long as capped at 100,000? And I believe that is correct. Dave, do you want to check me out?
Well, the only portion of the employer payroll taxes that is included as a payroll cost would be the state unemployment tax. And that's capped at a very small figure. I off the top of my head, it used to be around $14,000 per employee is what you paid self or state unemployment tax on. That's the only employer portion of the payroll tax that's included as a payroll cost. Employer match, FICA, Medicare, federal unemployment tax is not included ever, no matter how much compensation individual is paid.
Okay, Dave, I'm going to give this next one to you. In the Schedule A instructions, it says to not include owner employees in payroll amount. Can you include the payroll paid to the owner of a business?
Well, yeah, if that owner is receiving a W-2, yes, you can. Again, the only provision that you'd have to watch out for would be if that owner was making more than $100,000 on an annualized basis, then his compensation would be limited during this 8-week period.
Okay. For staff who make less than $100,000, can the payroll cover more than 8 weeks of payroll? For instance, we will have 4 biweekly payrolls paid in our compliance period and 1 earned. Can we use all 10 weeks of payroll expense for calculating forgivability if it doesn't put them over the 8-week max? So I think I've probably covered this, but just to reiterate, I do believe, based on how the application is written currently, that the covered period includes any amounts paid plus any amounts incurred after the last pay date that are then paid after year end, kind of on a pro rata basis. So while I don't know that it would necessarily equate to 10 weeks in your example, I do think that there's, based on how the application is written now, I do think that there's a potential that it may be more than strictly 8 weeks of payroll cost. Next question here, for an hourly wage employee in regards to the 75% reduction rule, do they only go by hourly wage? I'm not reducing the hourly wage, but I have employees who may be working 32 hours, which is still full-time. Their total wages will be 25% less if they were previously working 40 hours. So the way that I believe it is currently written is that it does only look at the hourly wage, and so there would not necessarily be a salary reduction based on reduced hours. If an employee goes on short-term disability during the coverage period, would this affect our employee count? And I believe the answer is no. Dave, do you know that?
Yeah, I can't say I know that for sure. I do know that, you know, if you have an employee that voluntarily resigns, or if you have an employee that you terminate for cause, that does not affect your employee headcount. Same with if you tried to rehire some previously laid off employees and they chose not to come back or refused to come back because they were making more on unemployment than what you were paying them. As long as you have a bona fide good faith written offer to them and that they refuse, then that will also not count against your employee headcount.
Okay, next question. What about interest on leased equipment, not vehicle? Dave, do you want to take that one too?
Well, I think in the application, when you say interest on leased equipment, I assume you mean what the interest component of that monthly lease payment is. Everything I've read and from the instructions in the application, they don't get that far into the weeds. They just allow the lease payment on the equipment, the full lease payment. They don't differentiate between what's the piece for the use of the property and what's the interest factor of that payment. So my answer to that would be 100% of the lease payment on business use property would be deductible, not just the portion of the payment that would be considered interest.
Okay, another question on the alternative payroll covered period. In essence, it says we got the funds on the 22nd. We issued checks on the 24th. Can I use the funds for that payroll cycle or should not have used them based on the alternative payroll covered period? So it depends on which method you're following. So if you're using the normal covered period, I think you're fine. If you elect to use the alternative payroll covered period, you would not use the funds for that payroll on the 24th. You would look at the payroll starting the next period. That election or that decision about which covered period to use, the standard covered period or the alternative payroll covered period, is an election made by each company. So I think you'll want to work through that or look through the different options there and see which is going to put you in a better position for forgiveness. Next question. I'm a graphic designer. Are software subscriptions needed to do my job a forgivable expense? And I believe that the answer there is no. The guidance was pretty well defined around interest, rent or lease payments or utilities. And based on the information provided here, I'm not sure that a subscription would meet one of those criteria. Dave, I don't know if you have a different view.
Yeah, I would agree with you, Michael. The definition of utilities does not include subscription. It includes telephone and internet access, but not subscriptions.
Okay. Okay, related to FTE calculations, take each employee and enter the average number of hours paid per week. However, I had one full-time employee who was gone for a week due to a rash on a leg. How would I handle that? So I think if they were still, if they were salary and just using PTO, obviously those costs can still be included. If they're hourly or PTO wasn't used, I think the short answer is I don't know that we have all the guidance there on how kind of employee absences midstream would be handled. Dave, do you have a different thought there?
No, I agree with you, Michael. I think, again, that's another question that hasn't been definitively answered yet by the SBA is how do you handle employees that are on essentially leave without pay?
Okay. Is the 75% for payroll costs calculated as 75% of the total loan or 75% of the total eligible expenses for forgiveness? For example, if you took a 100,000 loan and spent 65K on payroll and 10K on rent utilities, would your loan forgiveness be reduced to make this 65 at least 75 or of the total forgivable amount? Or would you not be eligible for any loan forgiveness at all, returning the unused amount? So the 75% is based on the original loan amount. And so in your example with the $100,000 loan, it would be looking at that to say you would need to spend at least $75,000 on payroll expenses. And so with only 65, the entire 65 would be forgivable, I believe, but the 10,000 shortfall would not be. And then as far as the rent utilities, that also is less than the 25% max, and so that 10,000 would be forgivable, but not the remaining portion. So I believe in your example, all 75,000 would be forgivable, based as it's written now. What do you think the likelihood of use of the money will go past the 8-week period of time? Apparently the House version of HEROES Act had either a 20 or 24-week period of time. Unfortunately, I don't have any information on this currently. Dave, anything from you?
Well, I other than what you were already aware of in the HEROES Act to extend that 8-week period and increase it, the only information I have is the American Institute of CPAs at the end of April. They sent a letter with a petition signed by a lot of CPAs in the profession to Congress, both the Senate and the House, to ask them to allow the borrower to determine when that 8-week period would start. And this was primarily in response to businesses that, were forced to shut down by their state governments and maybe hadn't opened back up either at all or to full capacity at the time that they received their PPP funding. And even this alternative period maybe is not viable for them. A perfect example would be if you had a restaurant that, in Iowa essentially couldn't open up until May 15th other than carry out. And even at May 15th, they're only at 50% capacity. So the AICPA is really pushing Congress to let the borrowers determine when that 8-week period starts. Haven't heard any results of that request. And again, the HEROES Act, even though there was a mention in there of making the covered period longer than 8 weeks, I probably wouldn't count on that happening, given the attitude towards the HEROES Act from the Senate.
Okay. Are employers' share of payroll taxes included as a payroll cost? Dave, I think you responded to that one.
Yeah, again, the only employer's share of payroll taxes that's included as a payroll cost is the state unemployment tax, SUTA.
Dave, I think another one that I'll send to you. Why the question on the application about the EIDL advanced loan info? I received the upfront emergency advance on 4/29, but I've received no other info from SBA since that time. Is the EIDL going to impact the ability to obtain forgiveness on the PPP loan?
No, if you receive an EIDL loan, a disaster loan, that does not affect your PPP loan nor the forgiveness. The reason for the question on the application was that if you had an existing EIDL loan at the time you applied for the PPP loan prior to April 3rd, you could essentially roll those proceeds, that loan, outstanding loan, into your PPP loan. And provided you spent the PPP loan on qualified expenses, which again were just payroll costs, rent, utility, mortgage, you could effectively make your EIDL loan forgivable. You know, otherwise the EIDL loan is just a true loan. There's no forgivable piece of it. That emergency grant that you may have received when you applied for the EIDL loan, up to $10,000 based on your employees, that is forgivable. And there's no restrictions or requirements what you spend that money on. And that is, keep that, doesn't matter if you use it on payroll costs or rent your utilities, or if you use it to, you know, on supplies or cost of sales, that amount's forgivable. So that's what that question referred to, was if when you applied for the PPP loan, if you had an existing EIDL loan outstanding prior to April 3rd, you could essentially roll that loan amount into your PPP loan and possibly have it forgiven.
Okay, thanks, Dave. Next question. I'm the treasurer of a nonprofit, received a PPP loan, and the nonprofit's relying on donations. We applied for the loan based on foreseen contribution drops, which have actually been steady but are now starting to taper off. Given the safe harbor provision for being under 2 million, is there any concern that there will be legal issues if we end June 30 slightly better cash position compared to what was expected? My take is there's not an issue, but would like a double check. So yeah, based on that safe harbor guidance that was issued, that is our belief, is that anything under 2 million is deemed to have met the safe harbor requirement, and there's no further clawback or anything that's going to happen there. So I think you should be fine there. Next question: Do you have any insight on whether the IRS will allow deductions of forgiven expenses for income tax purposes? Congress had said that the forgiven value of the PPP would not be subject to income taxes, but the IRS said in Notice 2020-32 that you can't claim tax deduction for wages, etc., that you would normally deduct. I have heard speculation that Congress may try to reverse the IRS stance. Are you hearing anything on this? Dave, I'll kick that one to you.
Yes, Senator Grassley, along with the chair of the House Ways and Means out of the House, who is a Democrat, so I think that's important because it really shows there is true bipartisanship, introduced a bill to prevent the IRS from applying Code Section 265 to prevent the deductions of any expenses that were paid for by a PPP loan that was forgiven. There's a disagreement on the IRS notice. They cited Code Section 265, and for the most part, they misrepresented what Code Section 265 really says. Not to spend a lot of time on it, but I'll just say that it did catch the eyes and ears of Congress, and they have said that the IRS is ignoring the congressional intent of the CARES Act and the PPP loan program. So they've introduced a bill to specifically exclude the forgiveness as income and to allow the deductibility of expenses. Again, this bill is not moved anywhere because of the inactivity in Washington, D.C. right now. But hopefully before the end of the year, when people have to worry about taxes and tax estimates, there will be a resolution.
Okay. Next question. Can we add our apartment building mortgage payment? We are the owner and manager of the complex. So unfortunately, I don't know if we have enough information based on the question here. If the apartment building is part of the company that received the PPP loan, you are able to include mortgage interest in the into the calculation for forgiveness, subject to the max 25% for non-payroll costs. If the apartment building is not part of the company, unfortunately, I don't think it should be included. So I might need some more information there to be able to answer that more completely, but just some preliminary thoughts there. Next question, in a C Corp, what are the rules for the CEO payroll amount max that has 55% ownership? So I think Dave touched on this before, but effectively, as far as the payroll amount is capped at 100,000, prorated for the 8-week period. So the math comes to 15,385. Dave, anything else to add there?
No, that's correct.
Okay. All right, next question. Following up on an earlier question about reductions in forgiveness for employees with less than 75% wage during 8-week period as compared to baseline, is that 75% based on hours worked, total compensation annualized, based on the 8-week period, or based on the hourly rate? I kept wages the same, but my hourly employees worked less hours. I need to compare the total wage. Yeah, so short answer is, yeah, our read currently and based on the application itself, pending further guidance, is that this is based solely on the hourly wage and not the number of hours worked. And yes, you are comparing to the period from January 1st through March 31st. That's kind of the baseline period, and then the period that you're comparing to is your covered period. So those are the two timeframes that you need to look at. Would company cell phone plans be included in utilities? Since we are construction, we give our guys phones and internet cards to run their job sites. So based on guidance that we've received so far, telephone and internet are acceptable utility costs. So I would say, based on what we know today, I would say yes, that's allowable. Question, is payroll for interns working part-time allowable? And again, I believe that the answer is yes. Dave, any other thoughts there?
No, I would agree to that. Anybody that receives a W-2 can be counted as payroll, whether they're full-time or part-time.
Okay. According to the CARES Act, we are required to pay out 2 weeks PTO for those affected by COVID or caring for those affected with an expected dollar for dollar tax credit to be forthcoming in tax year 20. How does that work if PPP funds were used to pay that PTO? Dave, do you want to handle that one?
Well, again, that would just be as though you're paying normal vacation or sick leave. As that money is reported to that employee as compensation included on their W-2, that would be considered a payroll cost. Now, there might be an issue if you're using those wages to claim the payroll tax credit. I believe that if you use PPP loan proceeds to pay wages that otherwise would be eligible for the sick leave or the Family Medical Leave Act payroll tax credit, that credit is disallowed at that time. But that would be the only consequence that I would be aware of.
Okay. I think we've got a couple here that are some follow-up questions on the the EIDL. So Dave, I don't know if you want to maybe walk through that again, how the interaction between the EIDL and the PPP loan.
Yeah, the way the original application was written, it had a line in there that asked if you had an outstanding EIDL loan at the time of your PPP loan application. And the way I understood the guidelines were, if you had a disaster loan outstanding that you took out prior to April 3rd, you could in fact include that in your PPP loan application and possibly have that forgiven. It would increase the amount of the loan you receive, so you would have to make sure that your total payroll cost and rent and utilities and mortgage interest could meet this additional amount. And if it did, then that EIDL loan was forgiven.
Okay.
And again, that advance that you received, and this was only for outstanding EIDL loans. If you applied for the EIDL loan after April 3rd, that provision was not allowed. Subsequently, if you received that emergency advance up to $10,000 when you applied for the disaster loan, that was already by law in the CARES Act treated as non-taxable and forgivable, and with no restrictions on what that money was spent on. So that up to $10,000 advances, keep that completely separate from any PPP loan funds.
Okay. Another question here. I received the 10,000 emergency grant EIDL. Then recently I received paperwork to apply for more. Do I have to apply, or can I just accept the 10,000? Yeah, I don't think you're required to take additional funds. You can make that call. Next question, does the FTE calculation need to be based on per week? We are a biweekly payroll. So the application defines the average to FTE as the number of hours worked per week. So looking at hours, total hours divided by 40, and then look at that average over the period. So I believe the answer currently, I would say, is on a per week basis. Next question is, when and for how long do employees that are to be counted in the FTE calculations need to be back at work if they took voluntary layoff due to concerns over COVID? So if you have a safe harbor, there are some safe harbor guidelines related to employees voluntarily asking for or requesting reduced hours, reduced time, and you've got an ability to just qualitatively add those back into your FTE headcount. So I would look at that provision and assess those, with your fact pattern. A couple more on EIDL, which we've talked. I think Dave's probably covered the general knowledge that he has. So I think if you've got other specific questions, I think we'd recommend either reaching out to your lender or to your service provider and run through your specific scenario.
Yeah, and I just add too, I saw a couple of those questions. The interplay between the EIDL loan and the PPP loan only comes into play if you already had received an EIDL loan prior to April 3rd. If you're applying for an EIDL loan when you're applying for the PPP loan, or after you applied for the PPP loan, there's no interplay there. And remember, April 3rd was the first date you could apply for a PPP loan, if I remember correctly. So there's no interplay between the two types of loans. if you didn't already have an EIDL loan issued to you prior to April 3rd.
I guess the last question here that maybe we haven't touched on, is there any reason not to take the EIDL loan now, take the grant and not take additional funds? And I'm not sure I know the answer to that one.
Well, I'll just say this. I know in the original EIDL loan application, it said that if you did not receive the EIDL loan, did not qualify for it, you did not have to return the grant. I don't know if you just subsequently not apply for it, if you can keep it or not. But I do know that there's been some major changes to the EIDL loan program. Originally, probably when most of you applied for it, it was a loan up to $2 million with an amortization period of up to 10 to 30 years at a very low interest rate. Since then, the maximum EIDL loan that you can request is $150,000, and the SBA is only processing applications from farmers or those in the agricultural industry right now. Doesn't mean that they won't process applications from Main Street business eventually, but right now they're focusing just on farmers and agricultural industry.
Okay, I think we've got two more questions here that we'll try and knock out. Could you please repeat what you said about earned commissions? Dave, I think you had touched on that earlier.
Right. Again, it goes back to some companies I know only paid commissions on a quarterly basis. Their question, or could they accelerate payment of those commissions to fall within their 8-week covered period? And as long as those commissions had previously been earned, that should be acceptable. A prepayment of those commissions may not be allowed. And again, the first place I would go to would be your bank, your lender, and ask them if that is allowable or not. And the reason why I say it may not be allowed is if you don't have a past history of prepaying commissions, then the bank and the SBA could argue that this was not an expense that you had incurred. There was an expense that you had no liability to pay it. So they could disallow it if they wanted to. But if that commission had been earned, then there should be no problem with accelerating the payment of that commission, even if it's not on your regularly scheduled timeline from prior periods.
Okay. Last question I think we're going to field here this afternoon. We have a self-insured health insurance plan and make monthly payments to a reserve account. Monthly payments are made to the third-party administrator from the reserve. Which of these items should we include in our forgiveness calculation? So I think if the reserve account is still owned and controlled by the company, that would not be the piece that you want to look at. You want to look at the cost going to the third-party administrator based on the facts that were laid out there. That's how I'd consider that.
All right.
Mike,
well, shall we stop, gentlemen? Shall we stop there? First of all, I want to thank you that was a solid hour. I really appreciate both of you taking the time to do this. We may have to ask you to do it again sometime, it sounds like. But just to wrap it up, we'll share the information from this program on the partnership's website. As a reminder, we also have DSM Forward playbooks and other resources available on our website at dsmpartnership.com/DSM Forward. Thanks again for joining us. Have a good day.